Good morning. I appreciate the enthusiasm. Thank you. Welcome to the final day of the American Land Title Association's Business Strategies Conference. A special welcome to those of you who are joining us on live streaming. It's great to have you with us. Also, a very special thank you to Fidelity National Title Group, who sponsored the wonderful breakfast this morning. Thank you, Fidelity. We appreciate your sponsorship, and we appreciate your participation in the association. I think I've gotten a lot of great feedback about the professional development sessions yesterday and all of the programming. I know that all of our sessions, as you can see from the pictures, were very well attended, and it was really fantastic to hear people talk about how much they wanted to get an opportunity to hear and participate in the other sessions that were going on that they weren't able to attend because they were in the one they were in. And I would remind everyone, if you use our QR code and go on our proceedings page, you will get all of the proceedings from the various sessions, and shortly after the Business Strategies Conference concludes, we'll get all of the recordings up and online, and so you're able to listen to the sessions that you weren't able to attend. Yesterday was also a big day for us in talking about the Title Action Network. We capped off the night with a very fun social hour celebrating the Title Action Network. For those of you who don't know, in the last year, ALTA has launched the Title Action Network as a way to get more grassroots individuals involved in the industry. I think that we would all agree that the topic of all of our conversation is rooted in what's been happening at the regulatory and legislative front. And that really demonstrates how important it is for everybody to get involved. And the other day, Justin Ailes, our Vice President of Regulatory and Government Affairs, asked a question of a group of why they may not have sent in comments to the proposed rule that CFPB issued on the new closing disclosure forms. And somebody said, there was a lot of really good feedback on that, and they talked about how, they're too busy or they delegated it to someone else. And someone else said, I felt like what I was going to say somebody else had already said. And so I didn't need to send in my comment because it would be redundant. And that's a very reasonable, logical thing to think. And the reality is she was probably right. Somebody else may have said what she said. But it doesn't make her comment or any of your comments less valuable. And so that's really the purpose of the Title Action Network, is to allow every individual to comment on what's going on from a regulatory and a legislative standpoint in a very direct, personal way. And so I would encourage you to get involved in the Title Action Network. We have 20 state land title associations who have also partnered with us in the Title Action Network, so they can use the tools, the electronic tools of the network, to reach out to all of the members in the state about state regulatory issues that are happening, and really leverage our grassroots capability both at the national and the state level. So get involved from your state perspective. Also get involved from your company perspective. So now we'll show a list of a number of companies, and I think that this has changed in the last couple of days, that have more than 10 members in their companies that are members of the Title Action Network. So what these companies have done is they've gone around and talked to their team about how important it is just to be involved and to know what's going on. And so they've asked everybody to sign up for the Title Action Network, and have done so successfully. I would encourage you to do the same with your teams. Because again, the real key is to get everybody at their level talking about how the rules and regulations will affect their job day to day. And each of those comments is very important. So I'm looking forward to seeing this list grow, and a special thank you to all of the companies that have worked on this project within your offices. This also, in talking about advocacy, I think is a nice segue into our first program today. We have a panel on the customer perspective, what lenders need from you to reduce settlement risk, and people have been very much looking forward to this. I'm going to call Frank Pellegrini to the front. Frank is going to moderate the panel for us. Of course, you all know Frank as the current president of the ALTA Board of Governors from Prairie Title in Oak Park, Illinois. Welcome, Frank. We also have Linda Elkins with us. Linda began working in the mortgage lending industry in 1976, so again, Linda was 5. She's currently the Senior Vice President and Operations Manager in the BancFirst Mortgage Division, which entails management of the loan pricing, accounting, closing, and shipping areas. She's been with BancFirst for 11 years. BancFirst is the largest state-chartered bank in Oklahoma with 83 locations. Consistently voted by Bank Directors Magazine as one of the top 20 strongest banks in the U.S. since 2007, BancFirst is publicly traded on the New York Stock Exchange. Linda has also served as a director on the Oklahoma Mortgage Bankers Board for the past 2 years. Linda, welcome. So we'll bring Linda to the front. And joining Linda, we have Penny Reed. Penny Reed is the Vice President of Settlement Services with Wells Fargo Home Mortgage. A 26-year veteran of the mortgage industry. It's really amazing and impressive how much knowledge and depth we have with all of our presenters. And I'm glad to have this kind of depth and history of the industry here. Penny has been with Wells Fargo for 20 years in various positions, including underwriting, credit risk management, capital markets, and agency relations. Penny is currently responsible for leading the business architecture activities of the Strategic Partner Management Group, which includes vendor management, settlement services, joint venture oversight, as well as strategic vendor opportunity identification and assessment for Wells Fargo's business units. Penny, welcome. Thanks, Frank.
Thank you, Michelle. And welcome, ladies. This is an extraordinary opportunity. I hope you'll all enjoy it. I think it's going to be very illuminating for us to talk to two very professional but distinctly different financial institutions. We have a very large, now before we go too far, Penny, you're going to have to take it easy on Penny. She's not feeling well today. So, but we're grateful that she's here with us.
I have my on-off switch for whenever I go to cough.
But we want to make this as interactive as possible. And as I was saying, we have the perspective of a large, major, national lender, national in scope, and then the perspective of a more regional lender that'll help us put a focus on how our industry initiative is going to play out with our customers. To make this really worthwhile for us, we want to make it as interactive as possible. I'll get things going with some questions, which I'm sure are on your minds, but I think there may be some questions that you may want to ask. So we've had 2 microphones set up here at the corner of the U, if you will, of the conference area. And please step up to those microphones. When I see somebody standing there, I'll recognize you, and you'll be able to ask your question. Please don't be shy. So with that, let's begin. And I want to start out asking you both for your perspectives on an initial question. Yesterday, I mentioned the settlement service network as being a delivery system. And I want you to tell me whether or not you agree with that assessment and if that is a good model for the marketplace. And then, if that is, describe for the group here what a good relationship with all those different points of contact would be in that delivery system.
You want to start?
I'll address that first. I see the settlement agent as a extension of the customer service that my department tries to deliver. My department only exists because our bank customers needed a place to do their long-term financing. So that settlement agent is an extension of my department for customer service.
And I would say from our perspective, it is a delivery model, but I also agree that we see what you do as an extension of ourselves, and in fact, a lot of times, you're the only people who ever actually see our customer face-to-face. Even though a huge portion of our volume is through our branch network with on-the-street loan originators, you would be surprised at how many of those applications actually occur over the phone. And our originator never actually meets the borrower face-to-face. So frequently, you're it. And from that perspective, that's one of the big values we see in your interactions with our consumer. And as as a delivery mechanism, the delivery of service, the one thing to remember is from our perspective, we do also see you as customers of ours at the same time. And many of you are customers, actual customers of ours. But your referral sources, your customers, you're the people in the local market. And our entire business model is based on that presence in the local market. So we see you as partners, customers, and the delivery mechanism for that settlement service experience.
Great, thank you. Well, that kind of segues into the notion, and this is a term that we've been batting around a little bit, and it's probably new to many folks, but the notion of reputational risk. Since we are your extension of an extension of your customer service and of your institution when we're sitting at the closing table, and of course we're the face now of the process. Describe for us what reputational risk is in your view, and how you see an appropriate means for enhancing that or giving you confidence over that reputational risk issue. Linda, do you want to start this time? Or?
Yeah, that's fine. I would say probably a great referral for my department would be for the settlement agent to refer someone to us. And of course, I would say probably only 25% of our closings does a bank representative get to, attend the closing. So again, you are our representative, and the customer is going to see you as, someone that's explaining all the information, going over the charges, and taking their money and distributing their money. And, if that doesn't go well, then I think it's a direct reflection back on my department and my company. So I think there's high risk there. So, we go through periods of going back through new title companies and, approving them through our process, and there is a reputational risk there if we don't make good judgment calls when we're selecting someone to be on our approved list.
From our perspective, every year we go through an exercise where we analyze all the risks we have and rank order them as, what's going to be the greatest risk of the coming year. And we have been in a mode for quite a while now where reputation risk is one of the biggest, and it's sitting up there at the top almost all the time, because what we found is almost no matter what we do, our name is going to end up in the paper, good or bad, usually bad, and typically the headline won't even necessarily reflect what actually happened. If you think about the times you've seen Wells Fargo's name as having abandoned foreclosed properties and we're not taking care of them. And what they don't tell you is the foreclosure is not complete. We have no legal right to enter the property. And, so you have, it's that whole story doesn't get in there. So we do a lot to manage our reputation. And if things go wrong at the closing table, from the borrower's perspective, it was a Wells Fargo loan where that happened. So we take that very seriously. I think from a settlement agent perspective, one of the things that, and I'll be honest with you, we worry about the most is your information security and your site security when you are dealing with our loans. And an example of that would be if one of you has an office where you have 1,000 transactions in process at any given time that you're working on, 1,000 closings you're getting ready to do, and 7 of those happen to be Wells Fargo loans. If your office gets broken into and your computers are stolen and that data, that consumer data, ends up in somebody else's hand, the headline will say Wells Fargo customers' data was stolen. It's not going to say Prairie Title, right? And it might, yeah, it might, but it'll be further down in the article. And so it's just human nature. They will go for the largest name they can get in the headline. So it is something that we're, I would say, cautious about all the time.
Sure. Of course, you don't have to worry about Prairie Title.
No.
Well, thank you. Would that Penny, just to springboard off that, I think you said it, but let's clarify. Is that your largest concern? We've got the 7 pillars that include money and documents and integrity of security systems. You mentioned integrity of security systems. Is that your biggest?
I think from our internal perspective, when we look at it, that's probably the one that scares us the most. That's not necessarily the rank order that I think our regulators would give, which is something for everyone to understand. This industry, by and large, and it's something I always say, we know for sure that you're all very honest people because we weren't watching you very close for a lot of years, and nothing really bad happened. That's not a good statement to give regulators. We know because they didn't do anything wrong. So they're going to be pressuring us to look a lot closer, take more steps, and from their perspective, depending on the regulator, if it's going to be an OCC banking type regulator, they're looking at basically financial risk, safety and soundness issues. So they're going to want to know how we monitor how the money flows. Who's watching the money? If you're from a CFPB perspective, they're going to want to know how we monitor the customer experience. How do we know things are going well? And it can't just be, the answer can't be anymore because nothing's gone wrong so far. So you'll hear lenders, and it's one of the things that have come up, asking a lot more information of you over the next few years as we get more used to what our regulators are going to want to see from us. But we're very confident about the financial risk because things have gone so smoothly. There's a lot of responsible people in this business, and the losses have been minimal when you consider how little supervision there was from the bank side. But the headlines are going to be around that NPI.
Information and site security. Linda, do you share that concern as being your top concern, or do you have another concern?
I would say that fiduciary responsibility is probably the biggest concern. And actually, when I was provided the best practices and I was going through there, it kind of brought to light to me that I'm not absolutely sure as to our vendors as to what kind of security they have for our customers' personal information. One of the things that we send, almost every closing anymore to the title company is we are sending the borrower's personal tax returns to be signed at closing for an original signature. That's a lot of information, and if that information is not kept secure, it will make headlines. So that your information brought light to me that, that's probably something that we need to check into. I mean, our bank is very enforceable about the information. Everything that we send out with personal information is encrypted, and that's not always fun for the person receiving that on the other side. They've got to remember another password to get into that, but that's the way we deliver our information. So that was good information for me to get.
One thing to remember about non-public information, and there have been a number of lawsuits about this, I can't name them off the top of my head, but a lot of times people think of it as, we're going to record these documents, so what's so non-public about it? Legally, it is not public information until it is recorded. So the fact that that buyer is buying that house and they're getting a loan from that lender is not public information until the day it's recorded. So right up until that moment, it's non-public information. It's just something to consider.
That puts a little unique light on that situation.
Right.
We treat those deeds and mortgages as being public the minute that they're delivered to us, but that may not necessarily.
Right. They're not public till they're recorded.
Absolutely. Absolutely. Well, that's great. I hope you folks are thinking of some questions and will engage us with some questions. If I run out of questions, I'm going to have to do my Joe Biden imitation and then ask a question that lasts about 25 minutes. So we hope that you'll prevent that from happening. Let's ask a question about, Penny, you mentioned the CFPB, of course, being somewhat concerned with the customer experience. And one of the pillars, of course, our last pillar is the issue of customer complaints and handling of customer complaints. Where does that rank in your world of importance, and how is it best to handle those?
You know, it's hard to pick any one that's the most important. That's why I felt bad doing it, because our expectation is that customer complaints are handled in a timely manner. We have a lot of mechanisms internally to make sure that happens, and even with all those, there are some that aren't answered timely enough for our liking. And I would say the best thing you can do is make sure you have an established process. Make sure that all the people on the front lines know who to refer those complaints to so they get handled, because they typically don't have the time to handle them themselves. And if they get into that mode where they're having to field the complaint and deal with today's work, usually today's work is going to take precedence, and the complaint starts festering, basically, because it's not being handled. So, you know, it is best to have an entirely separate process. Even if you're small, try and make it different people.
Linda, how about your view on
I think it's important to have a key contact at your location to direct complaints to, and those, you know, may have to work up through the ranks to get to that key person, but to have one contact for that consumer to go to get their answers and to hopefully settle it to the customer's or consumer's satisfaction. I'd like some feedback. To me, probably the biggest complaint might be money, charges, and my department tries to mitigate that by we work, in fact, we have a goal every year that we set that 90% at least of all of our HUD-1s are delivered to the customer and to the loan officer the day, at the latest, the day before closing, so that we go over all those charges. And so we're doing that so that the settlement agent isn't the one to have to address any concerns or questions that on our charges. But last year, our percentage was 94% of those HUDs were delivered to the customer the day before closing. But I don't know what other complaints that are out there that go directly to the settlement agents. So
I'd add one thing, and it's an area where you can help us too in case our frontline people forget this when you're dealing with them. But one thing we try and make sure we do with complaints, especially when they have to do with dollars and it's small amounts, is evaluate the complaint first to see if you could take the customer out of the equation. So if the complaint is a result of, I don't agree with you, and we're holding the customer hostage while we don't agree, let's figure out how to get them out of it, and then we settle our differences elsewhere. And you know, if you're dealing with any lender, and the closing person that you're dealing with at the lender is arguing with you over $15 that's holding up a closing, go to your manager, go to their manager, and I assure you they will tell you, pay the man. Just get the customer out of it.
How about the Oh, we do have a question. Very good. Thank you.
Am I on?
Yes.
Thank you. I've often wondered, as a settlement agent, why, in fact, we are being given the federal tax returns and the 1003s, the loan application, which contains highly sensitive information. Why, in fact, that should be funneled through the title company, the settlement agent, and just wondering, should not that be revisited at some point? Thank you.
I can tell you that we are revisiting that. It simply is one of those things that we've always done it that way, so we're doing it that way. The thing we want to be careful of is if we were to suddenly stop doing that, so we're sending them through an alternate mechanism to get signed, we want to make sure we're not breaking anything that we didn't know existed. And a big example of this is in the world of appraisals, the GSEs suddenly stopped asking for the cost approach. So appraisers stopped filling it out. What no one in the industry realized is that borrowers were sending a copy of their appraisal to their homeowners insurance agents, the prospective ones, to get a quote. And those agents were using that cost approach to give them a quote. So in eliminating that, we suddenly broke a whole other process that had been working smoothly. So one of the things we're trying to make sure of as we're looking at it is, when we order title, if we give you the 1003 today, if you don't get that, what vital pieces of information as a settlement agent are you missing now because we didn't give you that 1003? And the same with the other things that we send you to sign. I agree. It's just a matter of convenience. It's the one physical location we know they're going to be. So we send it there. And we need to find other ways to do that.
Well, if I can, the 1003 that we get at closing is somewhat different than the 1003 you get at the front end of the deal. The 1003 at closing is the verified information, as verified through your approval process.
Right.
In addition, the tax returns that we get are typically, we typically get the signature page of the tax return because the customers may have delivered to you an unsigned copy of their tax return. So you need a signature on that. In addition to that, you also need that 4598, which is the keep them honest. I think it's a 4598. 4506, okay. Which is the keep you honest form?
Right.
Yeah, okay, that the tax return that you see is the actual tax return that the borrowers have filed.
Right.
So the reason why you send those documents to us is because we're fulfilling a very important process for you,
Absolutely.
and that is getting that re-acknowledgement on those documents.
Right.
Anything to add to that, Linda?
I was just going to say, you know, in this day of technology, like you said earlier, many times everything is communicated either through emails or a phone conversation, and we do not have that that one-on-one with the consumer anymore. They may not have any idea what their loan officer looks like.
Right.
And in my instance, there's a lot of branch locations that they may have someone there to identify them. And again, many of our investors, even though those tax returns were a signed copy, they want original signatures on those to come to them. So again, you are the central location. You're the other signing component for us. You are the one that is going to physically meet those customers. And I was going to mention another concern of ours is for the settlement agent, identify that is my customer. I mean, those photo IDs and the list of items that we see as acceptable forms of identification, just make sure that's my customer.
Thank you. You're emphasizing the partnership approach
Yes.
here. This is great. Another question, Alma.
Well, first, let me thank you both for coming here and speaking on behalf of your institutions and for ALTA. My question hopefully will be appropriate. Would you add anything further to the best practices? I am hoping that you've had a chance to review it.
We actually, thanks to Michelle, we actually participated in the process along with ALTA through the process of developing them and providing feedback of what things were important to us. So it was a really good opportunity for us as a lender, and I know they reached out to some other lenders as well.
That's great, Penny. Thanks. And again, thank you both for being here.
Thank you.
Craig, you have...
Yeah, hi. Could you, we're struggling somewhat with the non-public personal information and how to protect it as we go through our office, both physical and electronic. Could you help us and maybe share with us what your offices do to protect that information?
You don't want to go there. No, I'm just kidding.
Thank you. Good night.
We actually, every single computer at Wells Fargo is encrypted. Laptops as well as desktop computers are password encrypted. And most of our sites require a key card to get in. And then there are certain sites where actual files are stored where physically you have to go through a turnstile revolving door that if you carry a box, it stops. It's this real pain. You can't even get flowers delivered because it'll stop the door. And that's because we have such great exposure at some of those sites. But there are ways you could do that, things like a clean desk policy where everything at the end of the day gets locked, physically locked up. Encrypting computers is always a good idea if they get stolen. You don't necessarily have to, you're only out the hardware costs. You're not out any of that, the value of that data that was on there. And I would say those two things are the biggest ones, locking things up and encrypting computers.
Same thing. I would say, we have the policy that, all of our files are to go back to the file room. One thing that you might want to do is make sure you have a fireproof safe that you store those items in, not just a file room. And periodically, your computers contain a lot of information, and if you don't have a software that is looking for the bad guys out there, you need to do that periodically. That contains a lot of information. Our company, the computers I'm blocked from sites that I think are harmless, but I'm blocked from them, and that's part of our security with the bank.
And it's very visible when you're inside a system at a bank that you will suddenly be cut off from the outside world with no warning. You get no email, no internet access, and it's basically there was an intruder or a threat alert, and they just cut you off. And then it comes back mysteriously, and everything's okay.
Yeah.
Sure.
Right. Right. Yes. No. No, the suggestion would be to lock it up in your house. And in fact, that's what they tell us. When we take our laptops home, it needs to be cable locked. And as we speak right now, my laptop is up in the hotel room, cable locked. You can't. Every laptop has a very small little indentation that there's locks that are made there. It's like a cable that you can loop around something that can't be moved. You just find something in the hotel room that can't be moved, loop it around there, and then lock it into the laptop. And they have to steal the entire piece of furniture, or right, it makes it really hard. And it's a very standard. It's this tiny little thing you'll notice on your laptop. I don't know if any of you have them, but every laptop has one.
Well, maybe we could find a provider for cable locks. We have a question back here.
Thank you. Again, I'd like to thank you both for coming and thank ALTA for facilitating these discussions. Title and settlement agents, the independent title and settlement agents are in a really tough time right now because we're all waiting to see what the consequences of the increased regulations are. And I guess one of the concerns is if we can all assume, and I think this audience would agree, that the independent title and settlement agent possesses a local knowledge, a local awareness, is a local customer of yours, is a business partner of yours, is a banking client of yours, and most of us are owner-occupied, so you've got that increased level of commitment to service you and to keep your loans closing, to keep post-closing suspense numbers low, to watch your money, to watch your data, and all that good stuff. The concern, I think, is that you've got this tidal wave of regulation hitting the lenders, which we understand and we see and we're very aware of. And if the lenders then pass along that tidal wave of regulation on these small to medium-sized companies, while we're all going to be put in a position where we have to sign off on whatever we're required to say we're going to do, the attorneys for the lenders have in effect shifted a lot of the responsibility. The concern is that the attorneys for the lenders will have overprotected them and shifted to these independent agents just a mountain of responsibility and liability that you have to agree to take on. But as small independent companies, 10, 20-person companies, they can't afford $500,000 a year in the compliance. So if you could just shed some light, because we're all waiting to see what's going to come through. We're all here ready to service you. We all want to raise our bar. That's why we're here. We could just use some guidance because we're all a little concerned. Thank you.
We are waiting to see as well. That's one thing I can tell you. We haven't gotten a lot of clarification. One thing I can point out to you that statement that came out from the CFPB is actually a restatement of requirements that the OCC had in place since 2001. And so we had already adopted a lot internally. What we don't know is how differently the CFPB is going to interpret those same rules. What we have done is we've been very clear with them, one, on the importance of the independent agent network to our business model, to our cities and towns, just the fact that there are all these small businesses out there, they can't, we've asked them to please consider all of that. We've actually gone to the CFPB, even with ALTA, to make sure they understand the importance of, we have centralized operations, and those centralized operations do refis, and they send them to big centralized closing hubs, and that's a piece of business that ebbs and flows according to interest rate. But our core business has always been purchase, and that's where a lot of the local market stuff comes into play. You're not just our customer, our banking customer, our settlement agent. You're our referral source a lot of times. And our entire business is based on referrals. So we're waiting to see, but we have also let them know where we stand on it and what our concerns are. And we'll continue to do that.
Thank you, because those regulations do talk to, reasonableness, given the size of the company, all that.
Absolutely.
So please fight the good fight for us.
Yeah, and we will, believe me.
Question.
Back to the security of NPI, I find in our companies, we go through the exercise of making sure that we're protecting that information, that the electronic data is much easier to protect and control. The concerns come from the paper and the custody if that paper gets lost or on the way to the shredder bin or whatever it may be, or in FedEx. At what point are the larger lenders and the GSEs going to accept the electronic signing of mortgage documents on a more wide scale? Because I think that's really kind of the root issue here, is that we're still dealing with paper in the 21st century.
Yes. And a lot of it is going to be driven by the investor demands. It's going to be driven by local governments that will or will not accept the actual electronic signatures or a hard electronic copy of a hard signature. They have different requirements depending on where you are. I think we would love to do that.
Even if you took the counties out of it, because I know they're typically sort of antiquated and behind the times, but that's one, the deed of trust, mortgage, which will ultimately be made public record.
Right.
That's really the least of our concerns. But if the lenders could step up, and the GSEs and the investors, and I'm not really sure where the issue lies, but we do have electronic closings now with some lenders, and have for several years, where they have you sign everything electronically except for the deed of trust or mortgage, and it's a simple closing. There's no trailing document issues. There's no missed initials or signatures. It creates a much smoother process for the consumer. We love it, so just love to see
and
more
I
people
know
use it.
I haven't touched base with that team internally recently. I know we have one ongoing perpetually because we'd love to have everything go that way. What I can say is, unfortunately, sometimes at our size and scale, because we're dealing with 50 states and 50 different state requirements, we will, on some things, default to the lowest common denominator because it's easier from a training perspective to say do it all one way. So if we have 3 or 4 states who will not accept it, or who, because of the way their laws are written, the electronic signature impairs our ability to foreclose, then we end up defaulting to that across the board.
Linda, would you like to
I was just going
comment?
to say, Oklahoma is still an abstract state, so we still have lots of paper. And regarding the electronic signatures, I sell all of my loans, and one of the places I sell my loans is to Wells Fargo. And I've got to wait for those investors to tell me what they will accept. Once they tell me that they're going to accept those and I can get that again for training issues and for across the board, then, you know, I think we would be happy with that. Again, I guess everybody has to address in their own state, county, their town as to what those county clerks are going to accept in the way of, and again, that needs to be across the board for us to go to that direction. But it's something we're looking forward to because I think the accuracy will be clearer and the customer's signature clearer when we go look at those paper documents.
Well, one can dream, right?
Yes.
All right, thank you.
Yes.
We have time for one last question, and we have a lady up there.
My question is that a lot of the closing instructions, after we actually do the closing, for funding, we have to fax back the documentation still yet on the closing instructions. So are you all watching for the instructions to be changed also? Because we've actually asked some of our customers, instead of sending them back via email or into a Dropbox, they're saying, oh no, we just want it comes right to our desk if you fax it. Are you all watching that some of the instructions on the back side of your closing instructions for our funding members are still reciting to be faxed?
Yes, and I do believe that for most of our operations, that when you have a fax number to fax something to, it arrives as an email internally to the specific person who needs to look at it. It's just how those numbers...
So instead of saying e-fax, they are actually, it is an e-fax.
Right.
That is coming back. It's not disclosed on the document itself.
Right.
Okay.
Nope. Right. Right. And we know that it's an issue and that it has to be addressed. The tough part about it is how do you do that without slowing everything down in today's environment? What widespread solution can you do that's not going to impair even one closing? And it's something that we're working on, we're looking at. We've had people analyze the way fax, it's very hard to hijack fax data. So in that way, it's safe. If it actually has a legal, a fax machine at the other end, that's where the problem comes in. Is you would physically have to put in a wrong number, and that wrong number has to be a fax machine. So in the risk ranking, it's actually safer than mailing because you can't encrypt the letter either.
Well, I think that kind of it wraps up our time, but I think the message here is that this is still an ongoing process. We're all still working through this, and it's going to be a while to get all the tweaks into the system. But thank you, Linda. Thank you, Penny.
You're welcome.
This has been very good, and we appreciate your participation.
Thank you.
Thank you, ladies. This is great. And I think the other lesson that I took from it, Frank, is that this is a partnership. And we've talked a lot about the importance of talking to your lender clients and having different discussions about what you're worried about, what they're worried about. And clearly from both of you, we got that message. So thank you very much. Appreciate it. The other thing I was thinking about, and Wayne Stanley, our manager of external communications, is going to be very happy to hear me say this, is I think we need to do a Pinterest board for great security tech tools. So we can do Pinterest on the cable locks for computers and Pinterest on, the people were talking about the biometrics IDs. So for any of you out there that are watching our Pinterest board, look for that page, which I think will be fun. Now there's one more thing for you to learn, Frank, Pinterest. We started Twitter yesterday. Wayne would also be very happy to know. I think Wayne should get some kind of gift from Twitter, because I saw several of our attendees sign up for Twitter yesterday, which is fantastic. And we'll see you on the Twitterverse. We have our QR code up on the screen because our next speaker's presentation is available on our proceedings page. So, and again, I don't know why we're not seeing more people taking their devices and scanning the QR code and get that. Thank you, Paul. Very nice. And we'll take you right to the page, and so you can get his presentation. And I think Doug Johnson with the American Bankers Association is a very nice follow-on to our morning presentation talking about cybersecurity, because we're thinking a lot about the best practices in terms of what we're doing to make sure that we're complying with regulations. But a bigger issue is also really protecting your companies and protecting your business. And that's really where Doug is going to come into play. So Doug is the American Bankers Association Vice President and Senior Advisor for Risk Management Policy, where he's involved in a variety of public policy and compliance issues. He currently leads the association's enterprise risk, physical and cybersecurity, business continuity and resiliency policy, and fraud deterrence efforts. He has assisted in the ABA's release of a series of resources to deter bank robberies, assess information technology risks, deter phishing, safeguard customer information, and buttress emergency preparedness. Doug represents the ABA on the Financial Services Sector Coordinating Council, which advises the federal bank regulatory agencies on homeland security and critical infrastructure protection issues. He's also a board member of the Financial Services Information Sharing and Analysis Center, which is a private corporation that works with government to provide the financial sector with cyber and physical threats and vulnerability information, a part of the nation's Homeland Security Initiative. Prior to joining the American Bankers Association in 1999, Doug spent 10 years as an assistant director of the Florida Division of Banking, where he oversaw the supervision and regulation of the Florida's domestic and international banking industry. Ladies and gentlemen, please welcome Doug Johnson.
Thank you, Michelle. Thank you very much. Thank you for having me. Appreciate the opportunity to speak to you today. And as Michelle indicated, I think that the session which you just had was a really good segue into what we're going to discuss here in terms of information security. And I was really pleased when I was looking at the best practices. Being a risk guy, the 2 of the 7 best practices essentially had information security components within it. And the nature of your questions lets me know that that's a very serious issue for you, and that you do take it as seriously as you really should. In terms of our agenda this morning, there's several different things that I'd like to go through. First and foremost, I'd like to give you an understanding of the whole nature of what we call corporate account takeovers. How many are familiar with that term, first of all? You will be by the time you get finished with this presentation. I use that as an example because I think it's a really good way, because it's one of the more current threats which small businesses and large businesses as well, frankly, are experiencing. It really gives a good way to talk about the relationship between the bank and the customer in terms of protecting the overall environment, and also gives you a flavor for the level of sophistication that these current crimes really have within them at this point. And of course, they always create a variety of legal issues, which I also want to spend a little bit of time on before I go into a case study, because I think that one good way to really work through this is to have you guys think through an exploit and come to some conclusion as to what the end result should be. And fair warning, you guys are going to be the bank when we get to that point. You got the money. Well, maybe. The money's gone. You guys are going to get to be the customer. You're going to get to be the judge. So there's where the power potentially lies, I think, as you'll see as we go through some of these things with poor Steve from Propel Software. And then after we talk through that case, I don't want to leave you empty-handed, because sometimes at ABA I'm called Dr. Doom because I deal with all the risk issues. But I really do feel that a more appropriate title is Master of Disaster, because at least then, you have some solutions associated with the issue. The last thing you want to do is sit there and say, problem, 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 problem. Have a nice day. That doesn't work very well, and it would probably be a career-limiting move for me. So I wanted to start first by showing you a phishing exploit. Now, we're all aware of what phishing looks like. We're all aware of the fact that early versions of phishing actually looked like talking about faxes. Later versions of the former famous Nigerian faxes with 7 misspelled words among the first 6. So that made it entertaining in and of itself. These things have gotten substantially more sophisticated over time. So consider yourself during your busy day and think of this as being something that you might see, not necessarily a subpoena to a civil court, which this one essentially is, but this is Steve Kirsch from Propel Software Corporation, and he's just going through his emails, and he gets an email from the circuit court, or the district court rather, and essentially it's a subpoena. Now, how many people get subpoenas in the email? That doesn't happen very often, if at all, but that doesn't mean that Steve is not going to click on that link, and it doesn't mean that there aren't substantial other kinds of phishing emails which you might receive, which look like they have a business orientation that you might click on. So you see that Steve can click on, obviously, a hot link, subpoena in civil case. You see it's got the case number. The thief was good enough to tell Steve where to show up if he was to be thereby commanded, to show up somewhere, the district or the U.S. courthouse in San Diego, and when to show. So all the components are there that would normally be within a subpoena, except it came electronically. So Steve, unfortunately, clicks on this email. Oops. So what happens when Steve clicks on this email? It's astounding to me that almost all of the exploits against particularly businesses start, no matter how sophisticated they are, they start with a very simple piece of social engineering. They start with a very simple piece of someone doing some analysis of Steve and doing an analysis of Propel and determining who's got the keys to the Treasury Kingdom, within the particular institution or corporation, and then pinpoint those individuals for those phishing exploits. That's essentially the beginning of the trail that gets much more sophisticated as time goes on. So Steve clicks on that email, and malicious software is on his machine at that particular point. And what essentially will happen is that software will sit on the machine and essentially patiently wait for Steve to either type in or go to a bank site. And once he goes to a bank site, essentially what will generally happen in the more prevalent version of this software is Steve will get a screen that essentially says that he can't access his online banking. The bank is very sorry, but you can't access it. Please come back later. And so when that happens and Steve waits for another time to get on, essentially the criminal has taken control of the devices. Let me go back one here. Has taken control of the credentials that got into that banking account. And we'll get into a little bit of that later. So once the criminal is into the account, sometimes in an automated fashion, in the case of payroll, let's use just payroll as an example, the software can actually create new payees, knows exactly where to go within the Treasury function, creates new payees, requests ACH be sent out of the financial institution, all while Steve can't get into his bank site, and usually sends those payees sums in amount less than $10,000 because of just trying to stay a little bit under the radar, but also because of currency of reporting requirements. Generally, because the criminals are going to cash that money out. The criminals are essentially mules that have been retained through a work-at-home scheme or some other scheme in the United States, and so they're essentially being retained as financial consultants. And essentially, they set up a bank account, they wait patiently for that money to come into that bank account, and then they're instructed to take, say, 10% off the top and then wire the rest of it through a money services business overseas. And so that's one way that the criminals generally try to get around the obvious nature of a transaction which went immediately to Eastern Europe Because if it was a wire that was going to Eastern Europe, that would tend to have, a little bit more of an ability to pull up antennas than if it went to a domestic bank account. And so it's all about the criminals having the full supply chain, including individuals that have opened up individual personal accounts to essentially send that money out on a much more anonymous basis through money services businesses. And so that's generally how the exploits occur, and they occur very quickly. That money can leave that account fairly quickly, depending upon what the ACH cycle is within the financial institution as well. Some institutions only send ACH out on a daily basis. Some will do it on a more periodic basis during the day. But nonetheless, I think one thing that's important here is that the criminal is using the bank, the customer's credentials. So no matter how that customer logged into that account, essentially the criminal is in the account. And so that would include, for instance, a random number generator like the RSA token does. That doesn't mean the token is bad. What it does is it really points to the need to have various layers of security, when you go through that process. You don't just depend on one because you can't depend on one. You have to have a strategy of a number of different types of security measures, when you're trying to secure an account. And so we've already been through the point of the money leaving the account. So essentially what happens next? Well, one of the things which is a real obligation on the part of the financial institution, particularly under new guidelines, is to ensure that business customers understand their legal liabilities. Because once that money leaves the bank, a lot of small businesses have the impression that they have the same level of protection that they do with their retail consumer accounts as they do with their small business accounts. And it's just not the case. The Federal Reserve Reg E dictates the consumer protections, and that means that you can essentially write your PIN. Don't do this, but you can essentially write your password on your forehead and walk around town, and the bank will generally reimburse you for any losses. There's no negligence standard as it relates to Reg E. With UCC 4A, which is what controls commercial accounts, there's a express obligation on the part of the bank and the customer to agree to what commercially reasonable security standards are going to be used to protect the account. And so you agree with the bank by contract and otherwise what you're going to do as a small business user or as a large corporation. And if you don't do that, you could be liable for that loss, and the bank has no obligation to reimburse you at that particular point. And so once money leaves a commercial account like that, obviously the forensics begin. And then there's some determination that's made by the bank and by an independent third party as to what culpability there was at the small business, because the small business may or may not, or the business in general may or may not have used the security procedures which had been agreed to. So here's 3 examples of how that plays out in terms of litigation. If a hacker hacked the bank by any kind of an attack and got the personal information associated with the business, well then, the bank is going to be generally liable for that loss. But if, as I indicated just a moment ago, if a hacker used a phishing scam, poor Steve at Propel Software, and Steve clicked on that link, that act in and of itself, in conjunction with what Steve may have otherwise done or not done in terms of securing his own business, that's going to dictate whether or not the bank is liable or not. But generally what will happen during a forensics process is it will be determined that the business maybe did not do all that they said they were going to do by contract. And that's what's so important about ensuring that once you've essentially signed those ACH agreements, that you understand what your obligations are. Because the phishing exploit doesn't only start the exploit, it starts the analysis in terms of what other things you as a company might not have done to protect your own machines. But here's where it gets a little gray, and a lot of cases fall into this particular arena. If the bank system is found to be lax, and a judge may find that it made it easy for the hacker to phish, the bank might conclude that the judge might conclude the bank's liable, but maybe not. So I think what happens is a lot of cases kind of end up falling in that gray area of having to have some determination by you guys, the judge, in terms of what this is to look like. So that's basically what the litigation looks like right now. Any questions before we proceed into poor Steve's dilemma here? Okay. So we already know Steve has clicked on the link. He's a wonderful customer of Bank A, and he has been for quite a few years. He's got large deposits. So first of all, why do all these things always happen on a Friday afternoon? You know, that's what I don't understand. But it always seems like it's always Friday afternoon that the world just kind of, in a lot of different ways. So Steve's got happy hour in mind, as some of you had last night, I understand, particularly after what I heard at 2 o'clock in the morning in the hallway. So Steve is attempting to do what he would normally want to do before the end of his Friday. And fancy that, he can't get into his account. He's already been infected. We know he clicked on the link. So he gets that screen that says, oh, we're very sorry. We can't give you access to your account right now. Please come back later. He tries 5 different times to do this and finally gives up. And so he goes to another machine, his assistant's machine, and together they manage to conduct the transactions and go to happy hour. End of day. They don't do anything to see what might have happened. You know, they had no clue, really, that essentially that was a device to essentially maybe conduct some unauthorized transactions. So why does Monday always turn into what happened on Friday? That's the other piece of this as well. So the Friday, Monday morning, Bank A's deposit ops area essentially gets a call from Bank B stating that they've received an ACH credit for $20,000 to a customer's account. The customer is one of those financial consultants that we talked about, one of those mules. Unfortunately, he's not a very good financial consultant, and he has the instructions with him and is having the teller try to help him figure out. Now, I'm told I'm supposed to leave 10% in the account and take the rest out in cash. So that was tending to give Bank B a little suspicion about what this was looking like. Usually the mules are a little bit more sophisticated than that, but derivations of this are a real case. So Bank A obviously began the investigation and, saw that about 75 grand had gone out of the bank through that account over the course of Friday, over a course of 5 minutes, but to different accounts within Bank B. And that's not unusual either, because some of the criminal networks will actually invite the mules to use specific institutions. And I don't think that's necessarily because they feel that specific bank is vulnerable to some degree. I think it's just a matter of convenience, frankly, because we've even seen emails that said, or let your financial consultant use the bank closest to them if they really want to. But nonetheless, all of them were going to Bank B in this case, and they weren't able to get the money. Bank A was unable to get the money back on behalf of Propel Software, so the investigation begins. Now, at the customer level, what we found was that the company was essentially conducting its banking on a networked PC as opposed to a standalone PC, and that the virus was found. It was only found on the CFO's computer. It wasn't found on anybody else's computer. But that the company wasn't keeping its firewalls up to date. No network monitoring was in place. IT department was outsourced in this particular instance. And what that points to is the fact that you can outsource the service, but you can't outsource the obligation. To the extent that you have hired services in this particular vein, you still have the responsibility, as the business to ensure that those services are secure. Dual approval functions were not utilized, so ACHs could essentially go out under one approval, one signature. Alerts were turned off within the system. They were a nuisance in terms of Propel Software. So they didn't have any alerting capacity to the extent that, for instance, a ACH went over a certain level or a certain number of ACHs were sent during a certain time, or ACHs were sent to certain locations, that kind of stuff. The token did its job. It reset after 30 seconds, But the criminal was already into the system, so the criminal was able to continue to move the money. But as I said, they were more interested on Friday and happy hour than they were necessarily in checking to see whether the transactions went through. And so when the assistant logged in, they didn't review anything, and they proceeded right to the transfer section and did what they wanted to do. Didn't mean that the CFO didn't check the accounts on occasion, but didn't do it in that particular instance. So investigating the bank, and what did the bank do or not do? So the bank failed to detect any of the 5 transactions as unusual behavior, even though the payees weren't payees that had been used before. The amounts were not amounts that were usual for ACH for that particular customer. The bank did not detect any of those transactions as being unusual. The bank had a requirement for dual approval of ACH. The customer had signed off on an agreement saying, okay, if you're not going to use this dual approval, you're liable if you essentially want to conduct these transactions without that second approval. And that's why it's so important to read those agreements, because what you don't want to have happen is realize that you've essentially signed off on a security measure that you just decided you didn't want, and then find out later that because you did that you have additional liability as it relates to the transaction. While the transactions occurred under some new guidelines that the banking agencies have put out, the banking agencies are all over this as an exploit, and they really have as part of the obligation the requirement that banks have really robust education processes so that you as bank customers know what your protections are and know what your protections aren't. And the bank really hadn't done that. So essentially, they had not given the customer the understanding of what their risks and liabilities were as they were required to under the guidance. And they also didn't have any particular dollar thresholds in place. They never really had that conversation with the customer about, okay, what's your normal transaction activity, and when do you want us to where do you want the alert threshold to be? You know, where do you want to get alerted to the fact that an ACH is about to go out before we release it? And are there locations that you want us to block as well? Or do you want us to use some system like Positive Pay to sit there and let us tell you precisely who we're going to pay, you know, before you actually even release the transactions, and so you can match them against the list. So none of that was really in place. Okay, so here's where the fun begins. Bank, jury, judge and jury, and customer. I don't know how to start this in this venue. Maybe I should start with the bank, and maybe the bank can explain why they don't believe they should reimburse Propel Software. Does anybody want to take a crack at that in terms of why they believe that somehow Bank A shouldn't reimburse? Anybody? They signed a waiver, right? So essentially they gave themselves that liability. So, anybody else? Yes, sir. Mm-hmm. Good. Starting to look bad, guys. The only thing the bank didn't do was the education piece. Are they a good bank? What do you think? Why should you be reimbursed? Right? Guys? Guys? Never to Europe. This wasn't to Europe. This was domestic accounts in the same. Sure, people do send HHs sometimes to new folks. See, I'm on your side sometimes. Yeah. I know who pays my salary. Yes, Van. ACHs should be blocked. Now that's the judge talking. So I'd already be worried about the way this is going to turn out when we get over there. Guys, should we even let Propel use this service anymore? I mean, it sounds like they're a little shaky in terms of they don't want to take their liability seriously. They sign off on stuff and don't do stuff. And you know, what should we do with Steve? Anything in particular besides string him up and not pay him? Close his account. That's whoa. That's pretty dramatic. And call all the other banks and say, don't do business with this guy. Anything else? Okay. Now we got the judge talking again. So, okay. That's more their question. Do you even want to do business with Bank A anymore? That's the question. Or you want to move on? I think some people want to move on. It's a little dramatic. Okay. Now let's talk about fixing. How do you define fixing? Do you think you should be made completely reimbursed in this case, or is there some way to negotiate this out, or what do you think? Do you think you have some responsibility here? Do you? Yeah. So you should take some kind of a hit, right? So you're willing to talk to the bank about that, right? Right? Yeah. And from the bank standpoint, come on, guys. You know, you were not completely. Yeah. Yeah. Mm-hmm. Okay. And controls, yeah, right. 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 Anything else on that side? Right. Good catch. Yeah. So, are you willing to settle? You got this. This is a pretty good account. Okay, it's not an unsubstantial relationship that you have with Steve and Propel Software here. Are you willing to negotiate this out and agree you've got some responsibility here as the bank, or are you going to stand strong, say no, and let these guys figure it out? Don't you just want to settle? You're going to let these guys? You're going to let the judge and the jury make the determination as to that's a little bit of legal risk. Exactly. Right. If you do feel that there's room to do that, that would be an appropriate cause of action. Yeah, absolutely. Try to get that done as soon as you can. It's great. I mean, it helps everybody. It helps the customer. It helps customer relations. Helps the bank. And it's also very much of a teachable moment, both for the bank and for the customer, in terms of securing the environment. So have we settled here, or are we going to have to go to? We'll go to these guys anyway, very briefly. But you see, there's some room for settlement here. I knew there was from Propel's standpoint. They'd indicated that earlier. Because we're reasonable people here. Oh, geez, there we go. There we go. You know, if you were a school district, I would say that's what they always do. Because there's nothing worse for a bank than to have the local newscaster up there with the microphone in front of the school district, you know, explaining how the school district just lost $500,000 and the bank is considering not reimbursing them for that loss. That's great optics. Steve doesn't get that kind of optics, though, so I don't know that that's the greatest strategy in the world. But, you know, talking to the local chamber, I mean, word travels fast. It's not like these things are kept secret by any stretch of the imagination. Okay, Your Honor, what say you? They couldn't get it done. They tried. They failed. It's in your hands. What do you think? Want to set it back to them and say, guys, figure it out? Or is it really so black and white that you just can make a decision? I see a lot of, anybody think it's black and white? Raise your hands. It's very, very gray. Tell these guys to go back and figure it out. That's what happens a lot before it even gets to that particular stage. And I think that clearly it would be the advisable path. So that's the Dr. Doom piece. Now we're going to get into the master disaster piece over the next 10 minutes here. They settled. Yeah. They generally look like half. Yeah. Generally that seems to be the bank says, no, I want, you say, no, I want 51%, right? Yeah. Million, that's another story. That's exactly right. So I should put another 0 or 2 in there and make the case, yeah. No. If the site's down, the site's down. Right. And even if there is, and you can never state anything with as much certainty as, God forbid, I just did. So if you do see that screen, don't assume it's from the bank. It may, in a remote case, be from the bank, but for the most cases, it's not going to be from the bank. It's going to be your machine has been infected. Call the bank. Yeah, you call the bank. I mean, that's when you need human intervention. You know, you just don't depend upon the electronics at that point. Okay. Essentially, and it's a very good question. Do banks sometimes give you that screen, you know, that says, sorry, down, come back 5 minutes later? And that's not a typical practice, but it wouldn't be completely out of the question. And so if you get that kind of a screen, you know, really the solution from your standpoint is call the bank. You know, find out whether or not the site is actually down. And I will tell you that because banks, no secret here, are going through a variety of denial of service attacks right now in the security environment, that their communication with the customers are, those whole communication channels are being refined and rethought so that we can make sure that our customers are aware of the most recent information associated with a potential denial of service attack that the institution is going through, and they're trying to bring their site back up. So we do see that those kinds of attacks are going to continue at the bank. Sometimes they will be used as a diversion. They'll be used in concert with, Steve will get the email, and all of a sudden, you know, he wants to call the bank. Let's say he wants to do the right thing. There could be even a time where you could not get into the bank's call center. Keep trying, be vigilant. You got to get in, and you got to talk to the institution. If the institution doesn't have on their screen, because even if the site's down, the initial login screen should have some information about the attack as well. So that's basically one of the better strategies. So there are a lot of things that you as individual bankers, or rather customers, can do to protect your system, and you're doing it in concert with your bankers, frankly, because we always say that the security is a partnership, you know, between the bank and the customer. I was asked by USA Today a while back, because I'd made the statement that the customer in an electronic environment is the first line of defense, and they were kind of astounded about that. The reporter said, well, no, wait a minute. I go into the bank branch, and the bank branch has cameras. The bank branch might have bulletproof glass. The bank branch might have a guard. And the bank is protecting me. I don't have to do any of that. Why should I have to protect myself as a customer in the electronic environment? And I said, because now the bank is in your bedroom on your PC that, goodness, your children might have access to, and goodness knows where they've been, and they might have, essentially downloaded some stuff as well. So I think that it's only when you have an effective partnership between the bank and the customer that you can really protect the environment. And some of this stuff is pretty standard. Just like Steve clicked on a link in an unsolicited email, just don't do it. And the banks still have policies of not sending you that kind of communication where they require you to click on a link. They'll want you to put the text into the email line, into the address line, as opposed to clicking on a link. But I think first and foremost is your own customer or employee education as well. What is your strategy within your own company to protect personally identifiable information? And I heard a lot of good things in the conversation earlier about that from your standpoint. I think that your best practices, the principles that you guys are putting together, really try to address the need to educate individual employees about what their responsibilities are and the importance of keeping that information secure. Minimize the number of computers that you're using for online banking. Even consider using a standalone PC for that particular function, and only use it for your online banking transactions. Don't use it for web browsing. Don't use it for any email communication, and that way you can ensure that that PC is separate and apart from other PCs that may be infected. Even consider using some operating systems that come off of that are different than the operating system you use for other things as well. For instance, you might want to use an Apple as opposed to using a Windows, and you could make that fit any way, but have some diversity in your environment as it relates to your PCs as well. I would strongly encourage initiating ACH and wire under dual control only. I know that some small businesses don't find that very attractive, but having two individuals, one to execute and one to approve, does a lot to try to really stop these kinds of transactions, and do consider positive pay and other services. I think one of the things that the community banks can do maybe a little bit easier than larger financial institutions is do callbacks to their customers. I think any institution can essentially do that. But I think one thing that's true in an electronic environment is sometimes putting a human in the middle of that process is an important component. And this is going to sound somewhat sexist, but it isn't. But I've used the comment before because there's this common man-in-the-middle attack, which is essentially what we just described today. And my comment is nothing like putting a woman in the middle of a man-in-the-middle attack, because putting that human being in the middle to essentially call back the customer and indicate and ask, did you, essentially, this transaction is a little unusual, did you make it? Did you request it is very helpful. Consider positive pay, like I said, but I think one thing you need to do, and Michelle and I were talking about this on the bus last night, is push back to your institution. There's nothing wrong with, if you don't think your institution is providing the type of security that you think is important, nothing wrong with telling them, I think you should offer positive pay. You don't, and you should. And by the way, I want it. And I think that is an important component of being aware of what tools you have that are available to you, and to make sure that you can avail yourself of those tools. And if you can't, ask your institution why not. That's a perfectly appropriate thing to do. And of course, understanding your responsibilities and liabilities as well. I think that you should consider your online banking your friend. Someone was asking me just yesterday whether or not they should just go back to paper. And I said, what does that mean? That you're going to sit there and wait patiently every month for your monthly statement to see whether or not there are any unauthorized transactions on it? Consider the internet your friend here, and use it to evaluate the transactions within your account on any timeline or within any sequence you think is appropriate. Any changes in the performance of your computer, if your computer starts to seem slower than it has in the past, and I think you should at least be wary of the fact that it might have a virus of some sort on it, and particularly to try to prevent that, keep your softwares, your anti-malware and other softwares up to date. But recognize that malware can't catch everything. Recognize that there are new threats out there on almost a daily basis trying to catch vulnerabilities within systems that haven't found their way into Norton or McAfee or any of the antiviral softwares yet. So realize that that's just one layer of control, like we talked about earlier. The token that we talked about is one layer of control. The antiviral software is another. You can't really depend on just one. And then, in terms of responding, I always like to talk about just pull everything off the net. If you think your institution or your business has been hacked, or you see unauthorized transactions and there might be malicious software, just dislocate that PC or all your systems for a period of time until you can do the forensic analysis. Just get them off the system. How painful is that? It's very painful. But the last thing you want is to have a vulnerability that perpetuates in a system that you haven't had a chance to evaluate yet. And obviously immediately contact your financial institution so that they can take the actions that they're normally going to take in terms of disabling account access and the like, and change your passwords, et cetera. It's important to maintain that chronology of what happened, because you've got a potential police report to write here. And so I think that just writing down exactly what you knew and when you knew it is going to help the police and help others really have a record of what happened. I will say that even national law enforcement, the FBI, is particularly interested in local small business exploits because they're very interested in trying to essentially disable the mule networks. And so they're very interested. You'd be surprised how interested the local FBI office is going to be in what you know about mule activity. So don't just think, oh, well, this is some exploit just against my company, and no one's going to care. They care. They really do. And I think that really thinking through what your contingency plan is going to be before it happens is another thing. What is your recovery plan? What kind of plan do you have in place, to the extent that you would have one of these events happen to you? So I want to leave you with a little bit of good news to close. This is a lot of good news, actually. You can't manage what you can't measure. How many times have you heard that? Well, we've been measuring over time the ability of financial institutions to essentially stop these transactions from going out the door, the unauthorized ACH transactions. They might be created, but do they essentially get out the door and out of the account? And I think that if you look at the red bar and you see monetary transactions were created and funds sent out of the financial institution, when we first started to measure this in 2009, 70% of the time that happened. 70% of the time those ACH transactions went out of the door, and then you had to go back through the process of trying to retrieve them. And you see by 2012 that went down to 9%. I think that's a really, really great story in terms of because these are the institutions that really care and follow this stuff and cared enough to respond to the survey, and so they're going to be the ones that are going to have the best mitigation measures in place. And what it really demonstrates is the fact that the controls that you can put in place work. And it's just a matter of education and ensuring that those controls are being utilized in a broader and broader cross-section of institutions. And that's our job as the Trade Association for Banks, is to try to ensure that they know what tools the institution has available to them. And I think that when you look at the green bar as well and you see that no monetary transactions in 2009, only 6% of the time did that happen. In 2012, 65% of the time, no transaction was even created. So to me, that is exactly the kind of trend you want to see. But it's only in concert with you as companies that we're going to be able to really accomplish that, because it's, as I've always said, it's that partnership. So with that, I'll close. And there's my contact information. Apparently, this is the first time I've been QR'd, so I'm so excited I just can't stand it. Yeah, high-tech stuff here. I think you also have the guide to small business protections, which we put out as well. That document essentially goes through in much greater depth each of those last 3 slides in terms of how to really figure out that this thing has happened to you, figure out how to respond, and figure out how to stop them from happening again. So thank you for your time this morning. And I don't know if there's any time for additional questions. I know I've gone about 5 minutes over anyway. Yeah. Great job, jury. Great job, bank. Sorry, guys. And thank you for your time today.
Thank you, Doug. That was fantastic. And I do think it was a lot more positive.
Yes. Thank you for your time.
Thank you very much. And the other thing that Doug did for us, which of course you guys know I like a lot, is he certainly gave everybody a to-do list, which is really fantastic. So you can leave this conference and have some very actionable things that you can do in your own companies. So we are closing the general session and moving on to a professional development session. We've got one more professional development session before we close with our lunch. And I want to take a moment to thank two of our sponsors of the professional development tracks. Of the best practices track with the North American Title Insurance Company.